Ladies and gentlemen, good day and welcome to the Astral Limited Q1 FY25 earnings conference call hosted by HDFC Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Keshav Lahoti from HDFC Securities. Thank you and over to you, sir.
Good day everyone. On behalf of HDFC Securities, we welcome you all to Q1 FY25 earnings call of Astral Limited. From the management side, we have Mr. Sandeep Engineer, Chairman and Managing Director, Mr. Kairav Engineer, Executive Director, and Mr. Hiranand Savlani, Executive Director and Chief Financial Officer. I'll now hand over the call to the management for their opening remarks, which will be followed by Q&A. Over to you, Sandeep, sir.
Thank you. Thanks for joining the earnings call of Q1. As you all are aware, that the pre-COVID volatility of polymer and chemicals were in the range of 1% to 3%, and its volatility today is in the range of 10 to 20%. In the long run, it's good for a bigger and cash-rich companies and very painful for smaller companies. But for a shorter period, it gives fluctuations in results for every company. In the past also, we have communicated to all our investors to please see our results on the yearly basis rather than on quarterly basis, because this kind of fluctuations are going to give high volatility in numbers either in top line or in the EBITDA margin level. But in spite of so much volatility in raw material side, I'm very happy to say that our team is in better position and able to manage this volatility and deliver a good 16% volume growth against our guidance of 15% volume growth. So we are very much in line with what we have guided. Our CFO will discuss more on the numbers, but let me take you to all the verticals of the business. In pipe, we have completed the Guwahati plant and it's fully operational now. Our bigger plant at Hyderabad is ready and trial runs are going on, and we are going to start commercial production in the last week of this month. That is August 24. Our fitting plant at Gilot is on the verge of completion and we are expecting to start the production in Gilot plant for the fitting from next month. That is September 2024. We have put 22 injection molding machines in phase 1 and another 22 injection molding machines will be installed in phase 2. Dholka, our expansion of existing plant for additional machines for pipe is in full swing and we are expected to start the production from Dholka from October 24. Regarding our Kanpur plant, construction drawings, plans are ready, all agencies have been appointed and we have awarded the construction work to a company which is starting the project work from the end of this month. Regarding new projects, we are planning to enter into OPVC and PEX pipes. For both of the products, our machines are ordered, machine orders are placed. OPVC trial production will start from October 24 and PEX will start in next fiscal year second quarter. Regarding bathware business, we are progressing very well. As communicated earlier, this is a new vertical for us, so we will go slow, but as we have guided earlier, we will be doing net sales of anywhere between 100 and 125 crores for this fiscal. Best part of the business is that all our customers who have used this product are, as well as the plumbers who are fitting the product, are all appreciating the quality of the product, so our confidence is going up for this vertical and this business. We are also adding new SKUs in the vertical and we are foreseeing a good growth coming from these new SKUs in the bathware division. Regarding our adhesive business, it is going as per our plan. This quarter also we have a very healthy growth of 14%, while the industry was growing very slow. It's not only the growth, but we have also delivered a very healthy EBITDA margin in our adhesive business at 16%. Our rural initiative in this vertical will give us further growth in the coming years, and all the products are very well accepted in the rural market. Regarding our UK operations of adhesive, this quarter was not good. It delivered a negative growth of 5% in top line and 2.5% in the EBITDA due to the elections and slower growth in the geography. We are closely monitoring the same and will work out plans to come back quickly on the growth path. We are confident that from Q3 we will be coming back to the normalcy of its business and to the plan as per the plan which we have made for the business. Regarding paints, we would like to inform you that we have launched Astral Paint in last week of June and opened Gujarat and Karnataka market. We are understanding the market and slowly will open few more states. The uptick in numbers will start from Q3 once we appoint sizable numbers of dealers for our brand. On consolidated basis, our growth is good. We are seeing the future of the building material industry is very good in India, so we are confident that we will keep doing higher than the industry growth and keep gaining market shares in the coming time. I will now request Hiranandji to take you through the financial, and we will take on your more questions on the business or whatever clarities you want in our question answer session. Thank you very much.
Thank you everyone for joining this conference call of Q1 number. First of all, I want to take you the few numbers and then we will give you the explanations of each vertical wise what was there in the quarter. So the plumbing business last year was 938 crore rupees, which has gone up by 8% to 1013 with an EBITDA of 17.94%. Of course, this EBITDA is including other income, so we are giving numbers in that way. That's why I'm putting this number. Adhesive business, India operation last year was 210 crore with 16% EBITDA margin. This year is also 240 crore, so almost 14% jump. Though the industry was very slow for adhesive, but our company has delivered 14% growth with the same EBITDA of 16%. So we have maintained the EBITDA in this category. Our UK operation was little bit disappointing this quarter. Last year it was 94 crore. This year it has delivered 89 crore. So almost negative 5%. And the EBITDA last year it was 8%, which is now 2.5%. But as Sandeep bhai said, we are working on that. In fact, we were expecting some improvement, but it is getting delayed because of reasons already mentioned, that elections and slowdown in the economy, which has resulted that. But we are working on few initiatives which will give us the growth back to the Q3 number onward. Paint, last year it was 40 crore. This year it is 42, so almost close to 4.5-5% kind of growth. EBITDA margin last year it was 17%. This year it has come down to 10%, mainly because of the new launch of Astral Paint. So for that we did a couple of big dealers meet in Bangalore and Ahmedabad city, and we have appointed a lot of new staff for the Gujarat region and the Karnataka region, and because of that we have to spend additionally 2.5 to 3 crore rupees. But this amount is 3 crore rupees, but if we work out on the top line of 40 crore rupees, it is working out to be 7%. So that's why it looks that the EBITDA margin has dropped from 17 to 10%, but actually it is not like that. So gross profit margins are maintained, but it's the only challenge is that we have spent this amount. That's why it looks that our EBITDA margin has dropped. So overall on a consolidated basis, we have grown 8%, and which is a very healthy growth under the circumstances where the polymer price were very, very low in the industry. The gap between the volume and value was 8% because of this lower polymer price, and that has resulted into the little bit loss into the EBITDA side also. Now I'm coming to that also. First off, we want to discuss about the gross profit margin. The GP has improved during the quarter, all-time high of 40% plus. So we are having no challenge as far as the gross profit is concerned. but it is not fully converted into EBITDA. Mainly the reason we have communicated in the press release, that is mainly because of the employee cost and the other cost which has gone up. If you see the GP1 on the per kg basis also, I think we have maintained little bit improved also on a per kg basis. So absolutely we are on a right track. Q1 is always slow quarter and polymer price were low, so the gap was wide between the volume and value. That's why also percentage EBITDA has come down. If the value and volume could have same, then the percentage EBITDA could have been much better than what we have delivered. We are quite confident that in coming quarters this cost will come down, like other costs and employee costs also, because our seasonal quarter is going to start now. And as mentioned, that couple of events were together in the Q1, particularly the ICC cricket and the IPL. Because of that, our extra 20 crore rupees cost was there on the branding, advertisement and exhibitions and all these things. But these costs will not be a regular kind of cost. So we will be stick to our annual budget, which we normally give and which is normally in line with the growth of the business. So we assure you that on a full year basis, this number will be in line with the growth of business. So we should not worry about this cost. This is the one of the cost of particular quarter, and that is loaded on a lower quarter. That's why it is looking in the percentage term very high, but this is not going to be the case on a full year basis. Secondly, in the second half, normally we have seen the element of CPVC will be high, value-added product will be high because our seasonal quarter is normally Q3 and Q4. So that is also going to give us a more advantage in terms of margin. Q1 is always, in the historically last 10-year number you see, it is loaded with the more of PVC product than the CPVC and the value-added product. So that is also one of the reasons that some pressure will be there on the margin. But otherwise, in the coming time, second half, it is going to be in a much in a positive direction. Secondly, we are also expecting that the BIS norms and the anti-dumping duty on PVC, which is already on the card, which may come in Q3. So that is also going to support on the polymer price in the second half. And second half is always peak in our industry. So that is also going to add further support to our volume and the, you can say, the advantage on the margin side. In the month of June, PVC price substantially gone up. But that pass-through doesn't take place because industry side, everyone was finishing the quarter and no one was passing through to the market. Everyone was expecting that from July onward, we'll pass through to the market. So because of that, everyone was expecting that the top line should improve. And equally, some inventory gain should also be there in the system. But actually, the pass-through doesn't take place in the industry. No player has passed through in the industry. So because of that, there was no inventory gain. Otherwise, the kind of price rise was there in the PVC, there could have been a inventory gain. So there was no inventory gain for us also. As far as the bathware is concerned and paint is concerned, right now we are spending more money. That's why it looks that the margins are low. And similarly, the bathware still, it has not reached to the break-even point. So that is also reducing our EBITDA to some extent. But the way we are seeing the growth in the bathware also. And once the all launch will be over for the paint, we may open up one or maybe max two state in the second half in the paint also. So then after, I think it will be a substantial growth into that vertical also, and that is also going to support us in the additional EBITDA. So lastly, as Sandeep Bhai said, we are always giving the guidance of full year basis. One quarter will not be the right method to do the evaluation on all the parameters. Some quarter where top line will be there, volume will be missing, EBITDA will be high, EBITDA will be low. This kind of things will keep happening on a quarter basis. But our annual guidance, which we have given 15% volume growth, we are maintaining that. If any change will be there or any plus or minuses will be there in the system, we will be communicating to you in the coming quarter. But right now we are confident that on a full year basis, we will be maintaining 15% kind of volume. Thank you very much. And with that, I want to open the floor for Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Hi, thank you, sir. Sir, this 15% volume growth that we are seeing, I think previously we are looking at 15% to 20% kind of a range. So, given the fluctuations in the PVC prices, is it possible that maybe second quarter onwards we can there is a chance to revise this upwards, or 15% would be kind of a max that right now we are looking at? And also now, particularly July, how was the kind of a demand, or maybe if you can give some idea in terms of the volume, how was it?
So like you see the history that whenever the polymer price goes up, the demand picked up. It is not a genuine demand, but it's a stocking demand. So the genuine demand will be the secondary sale. Primary demand keeps coming up and down. So whenever polymer price goes up, primary demand goes up. Whenever polymer price comes down, primary demand comes down. So that is the normal phenomena, and to some extent secondary also get affected with the price fluctuation. So we have seen in the past also, whenever price has gone down, the demand has come down. But the moment 1 or 2 rupees or 3 rupees polymer price goes up, the pent-up demand comes back. So I think on a basis of 1 month or so, it is very, very difficult for anyone to predict what is going to be there for the full year basis. But that is why we say that right now we are sticking to this volume. And if any change will be there, genuinely any uptick or slowdown will be there. Last year also you see, we guided 15% volume. And on a half-yearly basis, we revised the guidance to 20%. And we ended with 25%. So we are very, very sincerely communicating to our investor the reality of the market. This year also, we have not given the too high guidance. We have given only 15% plus kind of guidance, because we know there is a highly volatility will be there in the market. Otherwise, we could have guided you more also. But we don't wanted to do that way. That's why we have given the guidance 15% plus. 15% can be NV 16, 17, 18, 19, 20, anything, 15 to 20% number. So we have to see how our peak quarters are going to perform. If our peak quarters are going to give us a good result, then I think should not be any problem. We can achieve even more number also than the 15%. So 15% plus guidance we have given. So we are stick to right now that. As far as July is concerned, yes, you are right, absolutely. July is slow because the polymers are coming down. And another 2 to 3 rupees, everyone is expecting that the price will go down. And that is already reflected in the street, and every dealer and distributor know this thing. But beyond that, seems difficult to go down immediate basis. And if anything positive comes out from the BIS side or anti-dumping duty side, there are high probability the polymer price start going up also. Similarly, in the anti-dumping side of CPVC also can support in the increase in the price in the coming time also. So these all are subjective, and that is the reason we have given the range. So it is very, very difficult to monitor on a quarterly basis. But on a yearly basis, yes, we are quite confident that we will be delivering 15%.
Okay. And secondly, in terms of Q2, is there a possibility that we can see the inventory losses?
At this stage, we don't see any inventory losses. If further polymer goes down, yes, there can be a probability of loss. But at this stage, when I'm talking to today, it doesn't look that the inventory losses will be there.
Okay. And couple of data points, Bathware Q1 revenue and EBITDA loss was how much? And CapEx, how much we have done? And for full year, we were looking at 300, so that remains intact?
So, Bathware, we have already given the press release. We have done close to about 26 crore rupees of revenue, which is Y on Y wages. If you see, it is a 90% jump, but that is not a right way to evaluate 90%. It looks very good number, but the base is very low. And as far as the capex is concerned, we have not done any capex into the Bathware side because sanitary ware is completely outsourcing. And as far as the process is concerned, already our Jamnagar plant is operational, so we have not done any CapEx. And we have not given a guidance of 300. We have said we will be, Sandeep bhai also said in the initial remarks, that we should be doing between 100 to 125 crores revenue this year.
No, I am saying the full year at company level, console level in terms of the CapEx guidance. So that
guidance will be somewhere around 350 crore on a full year.
Okay, and then Bathware this quarter, how much EBITDA loss?
It is very difficult to work out exact loss because earlier it was a separate segment, but now our plumbing product fittings where we are using the brass element, we have started manufacturing this all brass rings in-house in our Jamnagar plant. So now that is clubbed with the plumbing business. So very difficult to arrive the exact number, but it will be very low.
Yes, it is very low, and there is no CapEx going to be done in the other business for this whole system. We have enough capacity from Jamnagar to take the entire range.
Okay, and lastly, sir, on the paint for full year, how much revenue we are looking at, and in terms of the margin, I think previously we said 14-15% kind of a margin. So that for FY25 remains the same.
So this year margin will be little lower as I communicated in first quarter also because of launch and all employee cost, because our revenue has not started but expenditure has started. That's why our margin has come down. And second half also, 1 or 2 more states may open. So in that also will take some initial cost, but we will be maintaining double-digit kind of margin.
And then revenue for full year paint?
Mr. Shah, may we request you?
The full year I am telling you minimum 10% kind of margin we are targeting.
Okay, thank you, sir.
Thank you. The next question is from the line of Sneha Talreja from Nuvama. Please go ahead.
Hi, sir. Good evening, and thanks a lot for the opportunity. Just a couple of questions from my end. In fact, an extension to the previous question on paints. Given that we've just launched it in Gujarat and Karnataka, how are we looking at further launches, and what kind of revenues can we see maybe from 2 to 3 years perspective in this particular division?
We have launched in Gujarat, and Gujarat also we just launched a month back, and we have got good amount of traction from the market. We have already 40 big dealers who have started stocking and selling Astral paints. We are opening Rajkot from this month, and then we are opening Baroda, Surat from this month, and in next 1 or 2 months we'll be also opening in the North Gujarat. See, the paint, one thing you understand is the paint we are going with the direct to dealer model also, which is there for when we bought Gem, the same model was there. And direct to dealer model takes some time to get established, but the sale in first 15 days itself for Astral paints was very good. We'll quantify some numbers on this from next quarter for Astral paints to make it more clear and clarity. And then in next 2 months we'll be opening 2 more states, which we want to finish Gujarat, go to Rajasthan, then go to Maharashtra. So we will be going in phases of 3 months, 2 months to open 2-3 states, then consolidate the position in 3 states in the western zone, and then work more on the southern part where Gem is present. And we would always, we are targeting a growth of at least 15 to 20%, 15% minimum from the level which we were last year. And as EBITDA already Rananji conveyed, the EBITDA margin would be maintaining double digits. We will have certain expenses to cover up the market, to create the market, and to grow the market. But the response is positive. The product is well. We have done lot of painter meets in Ahmedabad, in Rajkot, and there is a lot of positiveness from the painters about using Astral paint. And the response is also very positive in the rural markets where we have gone with our paint. Our segment covers all the paints. We have the iron paints and the normal paints which can be sold in the rural market. So the market is very positive, but as I would always tell, that when we acquired Resinova, the market and everyone got impatient about the competency and the way we would deliver. Now when adhesive is, you see the way we have grown, the way we have delivered, the way we have created new markets, new products. You will have to trust and give us time, but we will not derail anywhere in the business. We would not burn our capital behind the business. We will not throw capital behind the capex here without understanding. And we will always be in a positive mode on growth and margin. And keeping margin intact at a level, we will keep growing the paint.
Understood, sir. That was pretty helpful and detailed answer. Just second question from my end was related to pricing, especially CPVC. Of course, we see, PVC being volatile. CPVC, there were a lot of price hikes which were anticipated. How was that panning out? Is it still on the anticipated mode? Are we passing anything on? And moreover, how are the inventory levels at the dealer distributor level? This was the last.
So PVC price so far is stable. There is no much volatility, but there are high CPVC only, I am telling. CPVC price is stable right now, but there are high probability that because of this anti-dumping revised rule, there are high probability that the prices should go up. But because the PVC price has fallen, that the industry is under the little bit worried that CPVC may not go up. So because of that, no dealers or distributors are happy to keep the inventory. So everybody in a watch and wait mood. The moment some uptick will start, then everybody will rush to do the stocking. But at this stage, very light inventory in CPVC in the market, and everybody is worried what will happen. Like PVC, nobody expected so sharp fall will be there. So because of that, right now, and secondly, it's a rainy season also. So normally also the demand will not be that high, and quarter is always lean. So that is also one of the reasons. So I personally feel that from September onward, things should start moving and prices should go up. But right now, it is a stable and there is no price uptick.
Understood, sir. Thanks a lot, and all the very best to you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please restrict your questions to 2 per participant. If you have any follow-up questions, you can rejoin the queue. Thank you. The next question is from the line of Rahul Agarwal from Ikigai Asset Management. Please go ahead.
Yeah, hi. Thank you for the opportunity. Good evening. So 2 questions. Firstly, on adhesives, obviously console number looks lower. You explained that India was 14% with 16% margins. Wanted to know your overall outlook for the balance 9 months. In UK, you already shared what do you expect, but India, what would you expect in terms of growth and margins? And on a console number for adhesives, what should be the margin we should work with? That's the first question.
So I think India, we are expecting to maintain the similar margin for the balance 9 months. And at the same time, we are expecting 15 to 20% kind of growth. As far as UK is concerned, UK full year, we were expecting 8 to 10% kind of growth on a full year number. But we have to reevaluate the things, how it is going to span out. Because second half, we are expecting a lot of new things, development is happening. So it should definitely going to give us a good number. So on a full year basis, we are of the view that UK should give us minimum 8 to 10% kind of growth. And margin side, we are expecting somewhere around 7 to 8% minimum EBITDA should be there from the UK. And if the second half will be better, it can go up also.
Got it. That's pretty clear. And secondly, last question on the OPEX side. So I completely understand the explanation given on higher branding cost for about 20 crores for the quarter. But last year, if we remember that both the staff cost as well as other expenditure grew pretty high. I think it was 35% higher YY, about 250 crores for the full year. If you could guide us for the run rate ahead, that would really help. Like, how should we build the growth? First quarter, I understand it's up again 25% YY if I add up the staff cost and other expenditure. But some outlook on how should we look at staff cost and other expenses on a run rate basis going forward?
So see, staff cost and all has gone up mainly because top line growth was affected because of the lower polymer price. Now, hypothetically, if the polymer price goes up by 8-10%, then the percentage term will not be big gap, what we are seeing today. Secondly, that normally whenever you are adding the new verticals, new plants, like my Hyderabad plant is not giving any revenue to me, but my all complete staff is appointed over there and cost is already started incurring. So that number will come at a later stage, but I have to incur the cost in advance. Same thing, paint also, we are expecting good number in the coming quarter, but I have to appoint the staff well in advance. I have to train the staff. So all this cost we have to incur for the new vertical, new plants, new geographies, we like East and all that market, we have taken the entry. So there also we are increasing the manpower strength. So these all will definitely going to benefit the organization once the number will start flowing. But right now, the top line is affected because of the polymer that looks that staff cost is very high. And definitely it is high on this lower top line. The moment the top line will start coming, I don't think it is going to be a more painful in the coming quarter. And secondly, this quarter is a very lean quarter also. On that, definitely it is looking very high on the percentage term. But otherwise, if you see on a quarter-on-quarter basis, it is not that high. If I'm comparing Y-on-Y basis, yes, it is very high. So please wait for some more time. Once this polymers will start going up of 8-10% also, all the number will be changing. So our way of looking is that our gross profit margin should not be affected. So gross profit margin, not only it is gone down, but on the contrary, it is improved to some extent. If you see per kg also, it is maintained or little improvement. So we are not too much worried on the employee cost at this stage. But if the growth will not be there, then definitely it is going to be a detrimental. But we are having confidence that in the seasonal quarter growth will come back. There is no reason that India overnight will something happen to the country. So we are very positive. As far as the other costs, I have already given the explanation that we are seriously looking into that and on lower base and couple of events become together only and these events are booked long in advance. So sometime it happens that in the same quarter this happens. But in the coming quarter, it will substantially come down also. So on a yearly basis, it is not going to affect much. So we are quite confident on a yearly basis, whatever the branding budget or promotional budget we have given it to the team, we will be stick to that budget only.
So just to follow up, what I was saying was, first quarter typically has the lowest staff cost and other expenditure if you look at the full year trends. If you go past history for Astral. Should that be similar this year also?
So like whatever the percentage you are seeing last year, I think on a full year basis, more or less it should be in the same range.
Actually, I was referring to the absolute numbers, but I get your point, sir. I'll get back in the queue. Best wishes to you.
You can separately also call me on a specific number.
Yeah, sure. All the best, sir. Thank you so much for answering.
Thank you. The next question is from the line of Pujan Shah from Molecule Ventures. Please go ahead.
Hello, am I audible?
Yes.
Sir, we have been mentioning from few press releases about the OPVC and the segment we wanted to grow. And in our investor relation con call as well, we have explained about this OPVC to develop the technology via indigenously. We have been developing this technology. So could you just please give a glance how we have been, is it this first machine has been imported or we have been indigenously developing with any kind of association with any company? How we looking into it and how forward we have been planning to grow this segment and what could be the potential plans for next 2 to 3 years?
So OPVC, yes, we have guided that this will be our indigenous technology. We have not outsourced this technology, so it will be completely in-house. And to start with October, November and December, 3 machines we have lined up. So initially the capacity will be close to about 78,000 metric ton. Once the machine will be there and actual operation will be there, we will come to know exactly how the capacity is going to work out, but it should be somewhere around that level. and if we get good response and success, then we can expand very quickly. So we have to see how it is going to work out, and definitely it should be price-wise, it will be very, very advantageous to us, and that is going to help us to grow the market very fast. As far as market is concerned, market like this product, and a lot of inquiries are getting floated in the market, and the moment we will start, immediately the demand should come. That kind of inquiries are there in the system. So keep finger crossed. Once everything settles down and we start selling into the market, we will be in a much better position to guide you what exactly going to be there, what kind of the realization will be there, what kind of profitability of that businesses will be there. But at this stage, it looks very good, and it's a very, very promising product for the country per se, I can say. So it is going to help every player in this industry.
And there is no technology or license fees which we will have to pay, or no royalties. It is a jointly developed technology, as we did in our silent pipe or in our the PEP Pro pipe. And secondly, we will be making all fittings also in-house. So we will be not dependent on anyone to source fittings or pay any royalties or long-term things, and it will be purely, everything would be owned and run and done by Astral itself.
Sir, just to confirm, you said jointly developed. So we have been associated with any company, extrusion company, or it is just
we are associated with a technical partner, but we are not at the liberty to disclose from where we are sourcing the machine or what the technology is, for the obvious reasons.
Okay. And sir, we know that many of the technology we follow from the West, and even though just wanted to look into, like, if you look at the West countries and even China, so how they have been shaping out in this piping segment, this pipe segment specific, and is there any key risk?
We have anything with China at all.
Sir, didn't get you.
You are asking that how China is shaping up with this type of things, but we are not aware, nor are we anywhere involved in anything to be bought from China.
Okay. No issue. That is from my side. Thank you, sir, for replying.
Operator, this voice clarity is missing. We are not getting the right voice. Somewhere something is missing. So can you check the line?
Sure, sir. I'll check it out.
Volume thoda up karo, volume bahut dheere aa raha.
Sure, sir. The next question is from the line of Nitin Jain from Fairview. Please go ahead.
Yeah, thank you for the opportunity. So the volume growth that you have reported this quarter is quite good. However, if you look at the volume value gap, which you indicated, it's around 8% for Astral. So it's a little higher than what our peers have reported. So if you can elaborate on that and how we see this gap closing going forward. And also, like in the last 2-3 quarters, this is just an observation. Like there has been recurrence of one-off expenses, like the Jaipur event, then around 20 crore on branding in this quarter. So these are, I think, they are impacting the margin. So where do we see this recurrence? Do we see it subsiding going forward? If you could elaborate. Thank you.
All this will subside. See, we have already changed our branding strategy. We are moving out of and have moved out of the brand ambassador model. So we are saving money on the brand ambassador side. We are saving money on the TV ad side. We have moved out of the TV ads also. We are focusing mostly on the on-ground activity and cricket. And in cricket, IPL and World Cup, both the events happened in the same quarter. Now that is not in our hand because we have a tie-up with both of them. We had a contractual obligation to fulfill. So we had to do it. But then going further, there are no major such events in plan. So obviously the cost will come down.
Okay, so on a full year basis, it will be the same, is what you're trying to say?
Yeah. It will come down only. It will not go up. There are no major events. Now, only the events that are going to come up will be the major exhibitions and such things which are essential for trade. No other big bang activities are there in line. We have already finished them majorly. And we are in the mode of sticking to our budgets and guided figures. So be assured by these two fiscals it will come down but by the fiscal end it will be in line with everything what has been guided.
Okay, fair enough. And if you could clarify on the volume value gap, like for Astral it is 8%, but the peers have reported much lower numbers. So if you can elaborate on that.
So basically, normally what happened that first quarter, Astral is normally of a CPVC driven more company, but the first quarter is always loaded with the more of PVC product. And we opened up the plant in Guwahati and just Cuttack, where right now the more of sale is coming from the PVC side. So because of that, the overall it is like that. And the PVC also, if you see Q1 and Q2 was Y-on-Y basis substantially low, but June only it started picking up sizably, but that couldn't been passed through to the market. So that was the reason that the gap was wide. But going forward, I don't think in the coming quarter the PVC will be high. The PVC will be more. So because of that, that gap will be narrow.
Okay, that's helpful. And just to follow up on what you indicated that you were unable to pass on the prices like most of the industry players. Was it because of increased competitive intensity or how is it shaping up?
So normally what happened that everyone was sitting with the old inventory. And secondly, quarter ending was there. So everybody was of the view that from July onward we will increase. And all the big players were of the view that we don't want to pass on to the market. So because of that, and then the July already naturally PVC price come down. So normally in PVC business, it doesn't happen like that. So quickly it goes up and so quickly it comes down. Normally it stabilizes for some time and then either it goes up or it goes down. But this is the unique thing we are seeing for so many years. We have never seen that in a 1 month it is going up by 14-15 rupees and the next month it is coming back to another 11-12 rupees. This is not a normal phenomenon. So because of that, every one before it gets digest, it gets reversed. But otherwise, this kind of things we have not seen in the past. Normally, pass-through takes place within a week time or max to max 10 days time.
Okay, that's helpful. Thank you and all the best.
Thank you. The next question is from the line of Sonali Salgaonkar from Jefferies. Please go ahead.
So thank you for the opportunity. So my first question pertains to your volume growth again. I understand that we are majorly into plumbing and some part into DWC or infra. So could we get some kind of qualitative or quantitative color as to how much our volume growth has come from plumbing and how much from infra this quarter? And secondly, also how much from urban versus tier 1, tier 2, etc.
I think we don't share, Sonali, these kind of number in the calls, neither in the personal meetings also. These are the confidential things we don't discuss in the market.
Okay, fair enough. So my second question is a bit strategic in nature. This is regarding your new products and verticals. So we understand that you have started into bathware via greenfield and paints via an acquisition and then developed on that. So as of now, how much would be the distribution overlap of these individual new verticals with your core pipes business? And for how many more quarters do we foresee this added promotional cost to continue to strengthen our own brand?
So bathware has a bit of an overlap with the piping business. I would say about 50 to 60% of our retailers sell bathware product. So right now, our distribution channel and our retail channel has gladly accepted our bathware product, and the numbers are moving in a very positive manner, and we will only grow upon them. When it comes to paints, there is a bit of an overlap between paints and the adhesive side. There is not a major overlap between the paints and the piping side of the business. However, there are a few piping distributors of ours who are into project business, and into industrial business who have shown their willingness to stock and sell this particular product line of ours. So that is also a very positive sign for us. And with regards to promotional spend, see, we are not doing major promotional spend in either of the two divisions, neither in bathware nor in paints. The promotional spends are basically mostly the exhibitions that we have to do for the bathware product because it is a touch and feel kind of a product. And for paints, it will be mostly, painter meets and meeting the influencer who are going to test and experiment with your product. So that is, both of these are very essential for these businesses. And this is the only thing that we will continue. We are not looking to do any big bang branding campaigns or spend a lot of money behind these two businesses as of yet. And I would like to correct that in faucets, we did acquire a plant at Jamnagar, which has a good capacity, good product, a latest plant also, and with a good product line, and which could help us to make all our faucets in-house. But it was on an asset value base, so we never paid for any brand value or anything. So we got it at a good price, and we have our own plant at Jamnagar.
Understood. So very helpful to know. So and just lastly, wanted to clarify, are we or have we been a part of Nal Se Jal so far?
For our PVC product, yes, we have supplied, and we are in a few states supplying to good contractors. And it's a PVC-based product line. But it is not. It will not be a sizable. It will not be a sizable business for us because we are selling at our quality and our price. So it is not. Nal Se Jal is not a sizable business for us. We are only selling to the selected contractors who are buying it at our price, our terms, and our quality.
Sure. So as of now, say in FY24 or Q1, whatever you choose to, let us know, what would be the revenue accretion from Nal Se Jal, and maybe ask which states are we a part of?
So Sonali, it will not be possible for us to give the exact number because we are selling it to our distributor. And from distributor, it goes to the contractor or maybe site or maybe project directly, which is very difficult for us to know. So we don't know exactly what will be. And even if that number will be there, it will be very low. It will be very minuscule.
Understood, sir. Very clear. Thank you and all the best.
Thank you. Thank you.
Thank you. The next question is from the line of Praveen Sahai from Prabhudas Lilladher. Please go ahead.
Yeah, hi sir. Thank you for taking my question. I have only one question. That too related to your overall for quarter overall gross margin. So a gross margin of a 40.5% which you had delivered for a quarter. So how you see this number the way forward? Would you be able to maintain this, or is there any one-off there in this quarter, or you will see this to improve in the down the next 3 quarters because your seasonality is there in the second half?
So as far as improvement is concerned, I don't think we are already sitting on a very high margin. So there is no point to improve further from here. Even if it is coming down 1 or 2%, it's fine to us. But again, further improvement, I don't think we have a mindset to do like that. Rather, we will be more focusing to grow the business than the margin of GP. So we are at a very, very healthy margin. So our normal range is moving between 36 to 40% kind of zone. Precisely now it is 40% plus, but otherwise 36 to 39 kind of zone. So I think we will be happy with that kind of gross margin, but we'll be more interested.
Any one-off is there in this quarter or no?
Yes, sir?
Any one-off is there in the gross margin for this quarter?
There is no one-off.
Thank you, sir. All the best.
Thank you. The next question is from the line of Shubham Agarwal from Axis Capital. Please go ahead.
Hello. Hi, thank you for the question, Janji, and everyone. Okay, I have two questions. One is, can you quantify the one-time cost and the cost heads? Just to summarize, you've spoken of them over the call, but if you can just summarize what were the one-time costs in Q1 FY25.
So like the main one-time cost was 20 crore rupees for the branding, advertisement, exhibitions, and that related additional cost was there, which Kairav also explained. And I also initial remark said that because of few events happen at a one time, that's why another additional 20 crore we have spent into that. And to some extent will be on the employee side also, which is very difficult to quantify exactly. We have not done the working, but some portion will be into that side also. But employee and all will be normally in the routine part of the business. Whenever you are doing any new activity, new vertical you are opening, new market you are opening, new plant you are opening, you have to incur these kind of things. And then the revenue follow later stage. So the major chunk was, I think, 20 crore rupees on the branding side and advertisement side, and another few crore rupees maybe on this employee side.
Right. And so this 20 crores is after considering the savings, let's say, that you would have done because you were not doing, those brand ambassador related spends. Despite that, you spent 20 crores extra is what you're saying. And this will normalize over the next 9 months.
No. Brand ambassador and all contracts were there. So that cost was already there. So new cost of Kairav said that the brand ambassador will not be there. Whatever the existing recurring cost, because we have to pay that in advance. So that will not be the reduction into that side, but future will not be that cost. So to that extent, it will be a sizable saving in the coming.
Also, I would like to add that last year, whatever we had, the one-off event cost and all that also will not be there this year. Whatever we had, our 25th anniversary celebration event cost, etc., that also will not be there going ahead in this year. So that all cost will also be removed.
And that is why we said in the initial remark that you wait for the full year number. Definitely you will see that the cost will be only in line of the growth only, not going to be high on a full year basis.
Right. So I'll just move on to the second question, which is regarding the pipes business. So what I understand is that the whole, as you mentioned, that the industry was sitting on old PVC inventory and then they did not pass on. And at the same time, we are also hearing that the growth was subdued in June 24. So is it right to say that there was some kind of caution in the industry players with respect to the volume growth of PVC pipes, that they preferred volume over increasing, passing on the price increases to the market? Was there some kind of ambiguity with respect to the volume or the demand in June? And how is it fared in July and August?
Normally what happened in the month of June, in a phased manner, the prices go up. So in a normal circumstances also, normally every company gives 1 week to 2 weeks time to the distributor to manage the inventory. Okay. So everyone might have thought that even if we are going to increase the price, we are going to get the benefit for 1 week on an average. So that is not going to affect too much to the company's profitability. And everyone was on the quarter ending phase. So everyone was of the view that unnecessary disturbing the price on a quarter ending period, it's definitely going to unnecessarily create problems within the distributor. So industry not pass on that thing, but that is not the regular kind of phenomenon.
And to add to Mr. Savlani, that in our market, if the giants do not pass on the price after a PVC rise to the market, then we also have to follow the same, because we cannot work in the opposite direction.
Fair.
Basically, any price rise, it is very simple. Price rise in PVC takes a few days to pass on. But as we were about passing on the price rise, we don't say we have not passed on. There was a sudden product price which has come down, and because the reason is that lot of PVC which was earlier booked by traders at a lower price, all the material came together, and that material they wanted to offload for their capital churning, and it all happened very fast. Otherwise, if you see the way the PVC is globally, and if you see the way the PVC raw materials are behaving, there is no reason the price has to come down. We had a detailed meeting with the India's biggest PVC producer, and he explained that there is no reason that looking to the capacities and the VCM availability that this price at a lower bandwidth will remain. It will obviously improve as the stocks in the market are over.
Got it. This is helpful. I just want to ask one thing on the bathware business.
Mr. Agarwal, may we request you to return to the
Sure.
question queue for follow-up questions? Thank you
Sure,
so much,
sure.
sir. The next question is from the line of Manan Madlani from Kamaya Kya Wealth Management. Please go ahead.
Yeah, so thanks for the opportunity. So my question is again on the gross margin side. Could you even sort of stand on a console basis? Was it because of any change in the product mix?
So if you see the compared to last quarter, it is not much change, slightly improvement compared to the last quarter.
Okay.
There is no big bang increase.
Okay.
Very small increase. But yes, definitely it was all-time high. That's why we say. But otherwise, last quarter also it was close to 40% kind of thing.
Correct. Okay. And for OPVC, how much gross margin will be there in that business? Any broad range will be fine.
I think let we launch the product and then we will be having more clarity, and we have to see how the costing is getting worked out because it's a new product. So we have to understand how the cost parameter is setting out, and based on that we have to work out the realizations and all. Also we have to see how the competitive product realizations are there. Then only we will be deciding the final pricing and all things. So I think we have to wait for another couple of quarters. October machines are coming, so hopefully November market commercial production will be there in the market, or maybe quarter end or October end also. So we will be in a position to give you all this thing in Q4.
Okay. And on the adhesive side, how's the silicone pricing is behaving?
Silicone now I think it is comparatively stable. Not big volatility right now.
Okay. Yeah, thanks. That's it from me. I wish you all the best.
Thank you.
Thank you. Participants are requested to kindly restrict your questions to one per participant. We have the next question from the line of Ritesh Shah from Investec. Please go ahead.
Hello.
Yes, Ritesh.
Yeah. Hi, sir. One pointed question. You have given guidance on EBITDA margin on CNBC today for both plumbing as well as adhesives. So simple question is, what is the absolute employee cost and other expenses that we plan for FY25?
So we already communicated that all will be in line with the percentage margin whatever was last year.
So does it mean like 7.8% of sales and 14.6% of sales? That is what we are looking at, irrespective of the changes in resin price and the revenues?
Correct. No, if the resin price goes down, then the percentage can go up also.
Correct. So that is the reason, sir, why I'm asking what is the absolute number. The reason to stress upon this particular reason is in Q4, there is a lot of focus on cost rationalization. And in Q1, again, we see a bump, which we understand that it was perfectly logical and it was expected. So that's why I'm asking, like, at the start of the year, you emphasize on having full year budgets. So what is the employee cost that we are looking at on a full year basis? And likewise, answers.
So it is very difficult to give you the absolute number, Ritesh. Normally, every quarter on quarter, we monitor the things, and based on that, the new recruitment plan getting executed. So budget is always subject to certain number. If the numbers are moving in a certain direction, then we may add few, or if it is not like that, we may reduce also. So it is very difficult to give you the absolute figure in the beginning of the year. It keeps changing based on the requirement of the business and based on the growth of the business. So very, very difficult for us to give you that, okay, we are going to end the year at this number. And that is never going to be the right number also. Even if I communicate, it is not going to be the right, because it keeps fluctuating. In a business, it doesn't work like that way. If suppose my paint business give me extraordinary, I'm giving you an example. If my paint business give me extraordinary number, then I can increase that staff strength also. I can open the new city also. So in that case, my absolute number will not be matching. Same thing now, Hyderabad plant is getting open up. Now suppose Hyderabad plant is giving me extraordinary number in the beginning stage. I can add new staff over there also. So it is very, very difficult to quantify on an absolute basis. That's why we said that you have to monitor on the basis of percentage rather than on absolute number basis.
Right. So if I just read what you indicated on the guidelines, I'm on the same question. Let me just please finish. You have indicated a guidance of 16 to 18% for plumbing and 14 to 16% for adhesives. Is that right, sir?
Yes, it is the right number. It is the I have given it for the India operation, not the UK.
Correct. Yes. So let me just finish the question. So when we have given this EBITDA margin guidance, hypothetically, if the resin prices go down by 15 rupees for the rest of the year, my simple question is, will the management be flexible to cut down on the cost, or we will still continue to go ahead with the cost, and then basically how should one understand the sanctity of the margin profile?
So naturally, its cost will come down because we have to be sensible. If my business is not growing, if business is not giving me the right thing, then I have to reduce my cost. That is what we have done in the past. You see our history, 2007 we have got it listed. Today we are in 24, last 17 years. We have done like that way only. We are always trying to adjust the thing. When the quarters are good, we are working in a different way. If the quarters are not in our favor, we reduce also. So that is what the business, because we cannot keep spending the money even if the business is not growing. That is not the right way to manage the things.
Sure. I just have a related question for Sandeep Bhai.
In short, what we would like to communicate very clearly is that if there are challenges coming up in the polymer, we will be accordingly taking care to see that by year end we fall in the right number, and which if need be will start working and correcting from quarters, whether it is the other expense, whether it is the branding expense, or whether any other expenses are there. Secondly, manpower wise also we will be working judiciously to see wherever, but when you have two new things which are firing up, the same thing happened in the past when we acquired Resinova also, because you have now Resinova is proving itself, growing, everything is happening. So there are other initiatives also we have taken in adhesive business, and we are opening many new markets and avenue which give us these 3 quarters, and we will be again communicating when we meet. But very, very clarity, as Hiranand Bhai said, if the challenges come up in growth or in numbers or in polymers or chemicals or anywhere, we will be obviously cutting on the cost and see that we are maintaining our guidelines, and we will be very much conscious about our numbers and figures and EBITDA. So we are as a family, and we are as all of us always cautiously working and to see that things move in the right direction. Look at the COVID period, how quickly we reduce the cost. So we are understanding that, because end of the day we are the trustee of investors' money. So we have to judiciously work. We cannot work what we like, because ultimately we have to respect each other.
Thank you.
So based on the requirement of the business, we will act. Okay. Please go ahead.
We have the next question on the line of Akash. Please go ahead.
Hi, am I audible?
Yes, we can hear you.
Yes.
Hi, sir. Thank you for the opportunity. Sir, just wanted to ask, what is the gross margin in adhesives business in India?
India gross margin is 45%.
And what was that same quarter last year?
Roughly about 43.
Sure. And sir, what is the current plastic piping capacity, and how you see it increasing over next 2 years?
Current capacity, let me check my paper and give you the exact number. It is roughly about 334,000 metric ton.
And say by FY25, what will it be?
I think I have to work out because a lot of expansion activities happening at Hyderabad, then Gilot, then Hosur also, and then Dholka also. Every plant, some expansion activities going on because we are expanding the capacity everywhere. So I think maybe you can call me later. I can give you the tentative number, what will be the year-end capacity.
Sure, sir. Thank you so much.
Thank you.
Thank you. We have the next one on the line of Amit Purohit from Elara Capital. Please go ahead.
Yes, sir. Thank you for the opportunity. Sir, just one on the realization for the plumbing business. So, if I look at, you indicated that second half you would see improvement. That is largely to do with the base effects which will play out because plumbing cost had come down. PVC prices have come down during that period. So, mid to high single-digit growth, if the prices remain stable as of now, should be assumed, right? And the second, I wanted to check is sequentially because of the inferior mix. Also, you were saying that Q1 was looking low. So from here on, if prices remain same, then we should see realizations improving for our plumbing business. Is that right assessment?
Yes, sir. It's the right understanding. Even if the polymer price remains same, the coming quarter realization will be much better because it will be more loaded toward the plumbing side of the business than the PVC side of the business or agri side of the business. So definitely, even in the past also, if you see that the first quarter is always low and then every sequentially quarter it goes up and fourth quarter is always at the peak.
Okay. And so on a full year basis, there is a possibility that we may have 1-2%, even if the pricing remains stable, the realization could be better just because of YOY being lower in the second half last year.
Oh, no, it will be more than 1-2%.
Okay. So, and the full year margins for the plumbing business, you are indicating 16 to 18% percentage margin.
Correct.
Oh, okay. Thank you.
Thank you. That was the last question. I would now like to hand the conference over to Mr. Keshav Lahoti for closing comments.
Keshav, you are there? Hello, operator, can you hear us?
Yes, sir, we can hear you.
Okay, I think Keshav is not there, so we can conclude the call. Let Sandeep bhai to say the closing remarks.
So thank you everyone for joining the Q1 earning call, and we'll again get connected after the Q2 call. And thanks for your support. And anything which you want to ask or unanswered, you are always welcome to get in touch with us. Thank you very much, everyone. Thank you.
Thank you, everyone. Thank you. If anything is left out, any question, please call me on my mobile number. Thank you so much.
Thank you, sir.
Thank you.
On behalf of HDFC Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.